We've all been there. You walk into a luxury jewelry store at the mall, the lights are sparkling, the velvet boxes are soft, and you find that perfect gold ring for $500. Maybe it's an anniversary gift, a graduation present, or a treat for yourself. It feels like an investment. After all, it's gold, right? Wrong. In the eyes of the financial elite, that $500 ring isn't an investment, it's a sentimental tax. It's a stealthy way for the retail industry to separate you from your hard-earned cash while giving you an asset that loses 50 to 70% of its value the second you walk out the door. While billionaires are buying gold by the bar, the middle class is being sold designer gold at a 300% markup. Today, we're exposing the jewelry trap. We're going to look at the brutal math of retail markups, why 14 karat is a marketing trick, and exactly how you can buy gold that actually grows your wealth instead of just sitting in a drawer. If you've ever bought jewelry thinking it would be worth something one day, you need to see this data. We are breaking down the $500 mistake so you never overpay for sentiment again. To understand the jewelry trap, we first have to talk about the melt value. When you buy a gold ring for $500, you aren't paying for the gold. You are paying for the brand, the rent of the mall store, the salesperson's commission, and the expensive marketing campaigns. If you take that same ring to a gold buyer the next day, they won't look at the Tiffany or K stamp. They will look at the weight and the purity. In most retail rings, the actual gold content, the melt value, is often less than $150. That means you paid $350 just for the feeling of buying it. That is a 70% sentimental tax. In the 2026 economy, where every dollar counts, paying a 70% premium on an asset is financial suicide. Billionaires don't pay premiums, they buy at spot price. Why should you be any different? Let's talk about the carat trick. In the United States, 14 karat gold is the industry standard for jewelry. But did you know that 14K gold is only 58% gold? The rest is a mix of cheaper metals like copper, silver, and zinc. Retailers love 14K because it's durable, but they also love it because they can charge you pure gold prices for a product that is nearly half filler. When you buy sentimental jewelry, you're buying an alloy, not a store of value. In 2026, as the dollar continues to lose purchasing power, you need your hard assets to be as pure as possible. This is why the global elite only deal in 24 karat, the 99.9% pure stuff. They know that when the system resets, no one cares about the copper and zinc inside your ring. They only care about the gold. The jewelry industry is built on emotional manipulation. They spend billions on ads to make you believe that the size of the stone or the brand on the box is a reflection of your love. They want you to make a permanent financial decision based on a temporary emotional state. This is why the resale market for jewelry is so heartbreaking. People try to sell their rings during a crisis, thinking they have a $500 safety net, only to be offered $80 at a pawn shop. This is the liquidity crisis of sentimental purchases. A real investment is something you can sell quickly for a fair market price. Retail jewelry is one of the most illiquid assets on the planet. You are buying at the retail ceiling and selling at the wholesale floor. The gap between those two is where your wealth goes to die. But what if you love jewelry? What if you still want that gold ring, but you don't want to pay the sentimental tax? This is where the billionaires' jewelry strategy comes in. Instead of buying from a mall retailer, the smart money buys investment-grade jewelry. In cultures like India, Thailand, and the Middle East, gold jewelry is sold by weight plus a very small making charge. They buy 22 karat or 24 karat pieces that are recognized globally as currency. In these markets, if you buy a ring for $500, it's actually worth $470 in gold. Your tax is only 5%, not 70%. In 2026, we are seeing a massive shift in the US toward bullion jewelry. Companies are finally emerging that sell pure 24K gold pieces with low markups. This is the ultimate wealth hack. You get to wear your investment, look great, and know that if you ever need the cash, your ring is a liquid asset that has tracked the price of gold perfectly. You are turning a consumption item into a wealth item. We also have to discuss the opportunity cost of that $500 ring. If you take that $350 you wasted on retail markup and put it into an S&P 500 index fund or a fractional share of Bitcoin, what does that look like in 10 years? In 2026, the cost of looking rich is preventing people from actually being rich. The elite understand that true luxury is invisible. They don't need the mall brand to feel successful. They want the privacy and security of knowing their wealth is stored in pure, unencumbered assets. By avoiding the sentimental tax, they are able to accumulate more gold, more stocks, and more freedom, while the middle class is showing off their 14K rings. The billionaires are quietly filling their vaults with 24K bars. The 2026 invisible recession is forcing people to reevaluate their spending. We are moving away from fast fashion and retail rubbish and back to intrinsic value. People are starting to ask, is this thing actually worth what I'm paying for it? If the answer is no, they are walking away. You need to apply this intrinsic value filter to every sentimental purchase you make. Before you buy that ring, ask the jeweler what is the total gram weight and what is the purity. If they can't or won't tell you, walk out. You are being sold a story, not a store of value. In a crisis, stories don't buy groceries. Gold does. So what is your action plan for sentimental purchases? First, stop buying from big box retailers. Their overhead is your loss. If you must buy jewelry, look for reputable bullion dealers who offer wearable gold. Second, if you have old jewelry sitting in a drawer, don't just let it sit there. In 2026, gold is at all-time highs. It might be the perfect time to melt and move. Trade in your low-purity, high-markup jewelry for pure gold coins or bars that have higher liquidity. Third, change the way you think about gifts. Instead of a 14K ring that loses value, give a 1 gram or 5 gram gold bar in a beautiful display card. It's just as sentimental, much more impressive, and it actually sets the recipient on a path to wealth. You aren't just giving a gift, you are giving a financial education. The $500 gold ring is a metaphor for the way the middle class is being drained. It's small, it's subtle, but it adds up over a lifetime. Between wedding rings, watches, and designer accessories, the average American family wastes tens of thousands of dollars on retail markups. That is money that could have funded a retirement, a college education, or a business. Don't let the lights and the velvet boxes fool you. True wealth isn't about the sparkle, it's about the substance. In 2026, the substance is gold, and the smart money knows exactly how to buy it without the tax. If this video helped you see through the jewelry industry's smoke and mirrors, hit the like button and share it with someone who is planning to buy a gift soon. We're building a community of value hunters who refuse to be taxed on their emotions. Subscribe to Coin Crush for more deep dives into the 2026 economy and how to protect your wealth from the stealth taxes of everyday life. Watch this next video where I revealed the top 3 bullion jewelry brands that billionaires actually use to wear their wealth. I'll show you where to get 24K purity with the lowest possible markups. I'll see you in the next one. Buy the metal, not the box. Your 10-year clock starts now.